All right, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it. This week here, so markets staging another rally. So we did have the FOMC this week, and again, kind of mostly a bit of a nothing burger as far as like big news headlines or things of that nature. Powell was a little bit dismissive of kind of the recent uptick in inflation. Remember, PPI, CPI definitely coming in hotter than expected the last couple of weeks. We've talked about oil, how that's been upticking, although it did back off a little bit this week. We'll talk a little bit more about oil, of course, as we get later into commodities. By the way, speaking of commodities, everybody's talking about cocoa right now. It just won't stop here at 8,900 now. I've been hearing more headlines about producers panicking with their buying and being able to meet quotas. So supply very constrained there. Where does this stop? I don't know. I don't have a crystal ball on that one. I do know it is parabolic. It looks much more like a chart of NVIDIA at this point. So, it may be on borrowed time here, but either way, commodities certainly, and we talk about copper certainly later, but lots of commodities starting to push higher here. But in any case, Powell a little bit dismissive of inflation. And, again, it was kind of a dovish tone. At least that's the way the market is taking it. And we can see we had a pretty good rally. So this was Wednesday's candle. But the low from Tuesday, 51.31, we rallied up into yesterday at 52.61. So about a 130-point rally here. And again, you're going to notice we went right back into this topside trend line here, which goes back to the October lows. I did get rid of the lower trend line. The reason for that is we traded through it too many times, right? I had this drawn in right about like here. So I know it was connecting through these lows right here. And I think we just traded through it too many times, honestly. At some point in the future, could we coil up and maybe we could adjust it down to like here, and then it could, coil in, and, this could still be a tightening range to an extent, right? But I'm just going to leave it alone for now because that trend line's just been hit too many times, and I just don't like how it's not been respecting it. And like I was saying earlier this week, if the market's not respecting it, then I won't respect it. So that's just the way I like to do business. But in any case, we did hit this topside trend line. You're going to notice October high, and then right here, little pullback into that little zigzag down. 1-2 pullback there, little roll over, higher low. Again, pull back there, hit it again, pull back, hit it again, pull back. So this is kind of the area where we've been getting those micro pullbacks. However, really going back to the the first week of the year, pretty much, all we've been able to muster is a 20 MA test, right? So we test the 20 MA, we spiked the 20 MA, we didn't even get there. We test. So that would suggest that, again, if this is going to be consistent here, we should at least pull back to the 20 MA, perhaps sometime next week. And I would say the first red flag for bulls is if that 20 MA fails, honestly, right? Because that's been, that's been your support really the whole time. If we just draw we could even draw, I know we just erased that trend line, but even if we just kind of connect these lows like this, it's almost, you can make a case it's almost a parallel right here. To this top side, this blue trend line, but that would be kind of your next buy the dip level or area to buy the dip. If that fails, though, that would be kind of a red flag here, and I think we could start to have more of a steeper correction. Obviously, this market's had it's been in blast off mode for the last really like since October, obviously. Will a correction come? Yes. When will it come? We're not sure, right? But those are the things we're going to look for. Those are the things we're going to be aware of if we're looking for that buy the dip to fail. But right now, markets still have the upside bias, and we'll see what we get. Remember, next week is a 4-day trading week, so end of the month, we have Good Friday, and the market will be with a shortened week there. So only a couple of days left in the month of March here. But in any case, market's still holding up. and still showing relative strength. Now, a couple of things I want to touch on here as we'll go to the triple Qs. You're going to notice here, yes, we did make new all-time highs in the Qs this week, but we're not closing above that previous pivot high at 448.64. And you're going to notice this trend line here is still holding up. And I mean, you could even make a case perhaps that, you know, we could just adjust that a little bit. You can make a case that we just back checked to it. And again, looking at the Qs versus the spiders, again, look at this, high, higher high, much higher high, right? Whereas the Qs, yeah, slight higher high, but it's still backing off, and we're not even close to closing above this pivot. So a little bit of weakness here. One thing I've talked about is over the last couple of weeks is this rotation, right? What are sectors that are likely going to do better here if rotation takes place, right? Biotech, even ARC, like Kathy Wood's ETF has been holding up better. IWM had a huge bid this week, although pulling back a little bit on Friday. VNQ has had a decent bid. It is pulling back on Friday. But again, looking at the semis here, we have a high and a lower high there. So, and we're not above yesterday's high either. And honestly, I think a big part of the reason why we even had that gap yesterday is because Micron played catch up. So Micron reporting earnings Wednesday after the bell. They got a big bid yesterday. But I mean, looking at this compared to some other, you know, semiconductor names, if we go back to a weekly here, you're going to see it's just now making new all-time highs. So this is kind of playing catch up, and that helped out the SMH. But again, there's still a good setup here for a potential lower high in the semis. So if the semis start to roll, you're going to need to see other sectors pick it up. Again, like I just said, IWM. Hey, how about the transports having a really good week this week, pulling in a little bit today, still green on the session, but look at this, 1, 2, 3, 4, big pop there for the DJT. So rotation coming out of semiconductors, and money is going into other things right now. If money continues to come out of the semiconductors, see, I'll say this for the bear case. Again, we still got to negate that 20 MA, that higher low, that buy the dip that keeps happening. But if money does rotate out of the semis and we see a lower high here and we take out this pivot, I think the market can correct. I think the semis make up too much weight. NVIDIA, Broadcom, AMD, Intel, they just make up too much weight in the market now. And I think that would be a pretty good drag on the market, even if those other sectors catch an underlying bid. They'd have to catch a really big bid to offset that. Just like the semiconductors right here, right? Outperforming all year long. Mag 7 outperforming all year long. All these other sectors, Russell 2000 not doing anything, small caps getting crushed, biotech getting crushed, ARC getting crushed. That didn't matter because you had the Mag 7 and you had semiconductors just outperforming the whole way up, right? So I think on the way down, if semiconductors come in, that could drag the market down. Now, does that mean we're going to have a huge, 20% swoon? I don't think so. I mean, especially if you see rotation to other sectors, it just means that the load will be kind of lessened, right? It'll be more of a healthy type correction, more of a controlled type pullback. So that's something I'm on the watch for here. If and when that happens, again, still no, we're not even close to support being broken. Little bit, I don't like that. I don't like that there's a gap here and potentially an island after a long trend run. So that's the one thing I don't like right now. But again, just some food for thought there as we get into the weekend here. So anyways, we talked about the Qs and spiders. IWM having a good week. That is backing off here a little bit today. But you're going to see here on the weekly, big green candle and a bullish inside bar. So that's still holding up well. And again, seeing some rotation go into that. The Dow just got so shy of 40K. I believe they'll hit that. And I would think that if we are going to have a correction, this should hit 40K first. They're going to want to get that whole round number out the way before that does happen. But right now, Dow having a good week as well and pulling back just a little bit here. On Friday, SMH, we talked about watch for a lower high there. If this pivot goes out, this can go down to 200 in the short run. That's just a daily chart level. IGV staying inside of this wedge. So again, look at this. We hammered on the low end, got back up, tried to break it, closed back below it, and now we're back inside of it. So again, IGV still in this wedge pattern, and that still remains range bound for the most part. Still never got to that double top, so I'm wondering if it does have to go up there and test that. But right now on the weekly, it's still hanging in there okay. It is, it's just trying to let this 20-week moving average catch up to price. But it is still inside of that wedge. So again, we'll respect that. For right now, the transports we talked about, again, we hit that. We closed below the this trend line here, which triggered a head and shoulder pattern, and then it failed on the next day. So it failed and went right up. And again, I've been talking about this a lot, but the reason why it failed is likely because you have a weekly bullish inside bar on the transports. Big green, and that's contradictory to what's going on in the daily. Weekly is more dominant than daily, and you see what's happening there. So transport's holding up. Still a lot of resistance here at 16.2, 16.3. So it's going to need to do some stalling out, some pulling back, maybe some flagging if it wants to get through that. But if it does, then it can go back up to 16.6. So transports are hanging in there okay, and no real problems with them right now. Interest rates. So interestingly enough here, I think rates, so again, the bond market's a little different than the stock market, obviously. The bond market's a lot bigger. And here's the 2-year. Given the fact that Powell was pretty dovish, rates are still holding up pretty well. So 2-year is backed off of 475, but not really doing anything terrible. And you actually have a setup here potentially for higher lows. Same thing on the 5s, 10s, and look at the 30. I mean, you can make a case that's just a bull flag there on the daily. So if that breaks above 4.5, you know the bond market's calling BS on Powell. We can extend this trend line out as well. And if that breaks out, I think we're going to 476. I think there's a case to be made where the long end stays firm and even goes up versus the 2-year, which stays kind of muted. But rates here seem to be calling a little bit of BS right now. You know, if Powell's dovish, this should be, you know, right, the 30-year, all rates should be going down, right? They should be going down sharply. And they aren't right now. By the way, the dollar, look at the dollar here. It's breaking out, right? I told you guys 104 was resistance. We backed off of it for 2 days. Boom, right back up. So dollar now has weekly higher lows. Take a look at that. If we get through this, you know, it looks like the Forex market, the dollar index may be calling BS on Powell too. So a little bit of divergence here from stocks, the dollar index and bonds. Something to keep an eye on, right? The market doesn't really care right now. Maybe it will in the future. There's another thing that we should all be paying attention to, and that is the yen, dollar yen. I think through 152, that becomes problematic. And this is starting to crop up here in the news a little bit more lately. BOJ allegedly is going to unwind the carry trade. Look at this pattern here on the weekly, monthly. That ain't bearish. So we'll see how that works out here. Those are just some risks that I think the bond market is seeing, the equity markets are not paying attention to right now. All right, XHB, that continued to make new all-time highs here. That is through 110. I don't even have another level for this at the moment. It is, you know, overbought, parabolic on the weekly, overbought, parabolic on the monthly. But what can you say? It just keeps chugging higher. Until this gets a high volume reversal, it can still continue up. VNQ, I still like this on the weekly. It is a little bit softer right now on the daily, but no real problems to speak of. XLF got to double top finally, and then look at, we got a pullback here. This here is a fake print. So that is not a real exchange print. That was a misprint. But there's your double top, and you can see we're pulling back off of it. So we're going to close below the all-time high, it looks like, this week. But again, still, I mean, what do you expect? It literally ran straight up into double top with no pullback. So that is, you know, to be expected. But XLF still holding up. KRE, again, I still don't like the weekly at all, but you know, it's holding up for now. So that's really the best I can give you there. KBE is much better, much better. So this, you know, you're above the moving averages, starting to see some separation between them on the weekly, and that pattern is still okay. Broker dealers, again, new all-time high, but then coming back in a little bit today. Again, they're overbought, due for a correction, but you know, they can still go higher at the moment. All right, getting over to commodities here. So oil, that had a pop early in the week, then came back in. I still have a target of about 84.50 to 85. So that's going to be, we're just going to take a 618 there, and you're going to see perfectly 84.60, right? That's where it should go. And I don't see anything that changes that right now. Unless it starts to break back below 79, then it could be in a little bit of trouble, but right now it's fine, and I think it can go higher. XLE continues to pump up, although it is into some resistance right now. XOP, same thing, into all these pivots here. It probably needs to back off. And my OIH, which has been crushing it for me lately, that also is into some resistance as well. Look at this red bar, breakdown bar. And again, same thing, kind of that 618, if you can see it right there. There it is. So 618, now we're backing off. Again, it's just overbought here. It needs to do some backing and filling, but energy market's been holding up nicely. Uranium here, so CCJ back above 42. You still have resistance at 44.50 to 45. But you know, it's gotten a nice bounce here. I won't make too much out of it right now. If it puts in a lower high, then it's going to want to go down to 37.50. I think that's good. Possibly even tradable support. URNM, that is getting saved again. So this continues to be strong on the weekly. We've never closed below this weekly green bar. So until that happens, this is still in decent shape, excuse me. And URNM is as well. Or excuse me, URNJ. So URNJ acting okay. Nat gas continuing to pull back here. I think this wants to spike the low, and then I'm probably going to get very interested in it for a trade. Typically, you get a bottom around this time of the year anyway, but I'd say a spike of that low 140 area, that would get me kind of interested in nat gas. Dollar index we talked about. You're kind of into a cycle level here at 104.50. Next level is 105. You get above 105. I mean, this is this can go to 106. You got weekly higher lows now, and you're going to close above that breakdown bar on the weekly. So dollar holding up really well. And despite that, gold holding up well too. We did make a new all-time high yesterday. I think that may be a little bit of a local top though, as there was a lot of volume in that. A lot of sellers came in. It's nothing terrible, right? But if we break 2150, this will go to 21 and then back to 2075. One thing I noticed is like GDX is still holding up really well, relatively speaking. Like it's still, you have the big green bar on Wednesday, and it's just pulling back a little bit versus, gold, which seems to put in that big tail, and it's retraced most of that move on Wednesday, perhaps because it's already priced in that Fed, whereas GDX was kind of closer to the lows. You can look at GoAU, same thing, GDXJ, and even, well, let's get over to silver here. Well, let me finish that statement. GDX, I would say this: GDX has held up better the last 3 days than gold. Okay, but watch 2150. We break that 21, and then 2075 are your next levels. Okay, silver. I told you guys all week, watch out. Like I know it's had a nice move, and even on Wednesday, big move. It looks impressive. It looks nice, but there's a lot of supply in that bar. Trust me. And we had a big engulfing candle yesterday, and we followed through to the downside today. Again, I'm not saying that this is going to go like massively hemorrhage or anything, but it's going to take a lot of consolidation to get through that. That's really just what it comes down to, which is good because it gives us more of a chance to buy dips and do that type of thing. But it did come back in. If we look at SIL, again, same thing though. Look at the low of Wednesday, right? And then look at SIL. Look at the low of Wednesday. Look at SILJ. Look at silver. You're below that, right? So I tell you guys this all the time. Miners are leading the metal now. So pay attention to that. If that continues, that's a big, 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 big bullish sign. But silver backing off here, 24, 25 to the next level, and then through that 2350 if it gets that low. Platinum backing off today on Friday. Still has a chance for higher lows on the weekly. Palladium, same thing, but this is still holding up okay. I don't really see any major problems there. Copper did back off this week, but it had a big run last week, right? Didn't quite get to that 420 pivot, but it got close. Now it's pulling back. Short-term support at 395. That could be a quick pop level. We'll see what that does on Monday. But copper still acting well here. And then lastly, Bitcoin. So Bitcoin did not take out that. Here's the only red flag with it, right? It did not take out that high on a closing basis from last week. So that's the only red flag, and it's not even the worst, right? Bitcoin could just go sideways like this, and then that moving average is 20 MA could just catch up to price, and then it can just go higher. There's nothing to say it can't do that, But I would prefer to just get that close out of the way. That way it's just, that psychological level's just out of the way. But right now on the daily, it's backing off. The alts are still running. I hear about these alts, like Solana coins right now are just like absolutely out of control. So you're still seeing speculation. You're still seeing money flow. So I'm not saying it's anything problematic just yet, but it is backing off, and it probably does have some type of a high in place. Even if that's a local high or a medium-term high, I think it does need to back off a little bit. So again, with the spiders here, just to wrap up, again, this trend line should offer some resistance. Big question is, can we come down and actually slice that 20 MA and then take it out? And if we can, I think that you could have a little bit steeper of a correction in play. Again, not looking for a huge dump here, but again, we'll see what we get going into next week. Remember, it is a shortened trading week, so yeah, some market participants may take off a little early, so volume may get lighter as we get towards Wednesday, Thursday. But for right now, again, give buy the dip to bias until support fails and they give us a reason not to. So anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll see you guys all next week.